you've always got to be very, very honest and open. I think I'm probably too open sometimes, but you've got to be an open book, and with that comes that communication. So you're always updating someone, and if something's a bit behind, you tell them. You're not saying, oh, we'll get back to you in a day or two. It's always like now. The biggest thing is about not over-promising. You've got to set realistic. You've got to be realistic. Set realistic targets and timelines for all parties, because the worst thing you can do is over-promise and under-deliver.
Welcome to the Property Funder podcast. I'm your host, Michael Dean. You can find me on the internet at property_funder. I'm here today with George Ormerod, who's relationship manager at Avamore Capital. George, welcome.
Thanks, Michael.
You're one of the up and coming rising stars at Avamore Capital. Tell us a little bit about what you do.
Yeah, so I'm a relationship manager. So I'm often on the road meeting brokers and borrowers as well. I'm the one dealing with all the terms, spreading the good word of Avamore on what we do. I say reviewing the inquiries, issuing the terms, presenting the deals to our credit committee, and then I guess overseeing them through underwriting all the way to completion.
Yeah, and how long have you been doing that for?
So 2.5 years now at Avamore, but sort of since January actually on the road. Before that, I was an internal relationship manager, so in the office supporting the London BDM, so looking after all their inquiries and presenting those to credit. Nice.
And your career didn't start in real estate finance. Tell us a little bit about your journey.
Yeah, so a little bit rocky at first. So I went to university and studied economics, and then the plan from there, I had a few internships in accountancy and in finance, but the plan was to go and be an accountant in property tax. And then I graduated in 2020, so obviously COVID kicked in, cancelled all the grad schemes, and it was back to the drawing board. So I'm from Horsham, down in West Sussex. I was at home, and anyone that is from Horsham wants to probably escape after 22 years or so. So the plan was always move to London, and unfortunately, obviously the grad scheme failed. So the only things in COVID that were, in terms of the job market, were recruitment and estate agency. And I figured, well, if you go into recruitment, you'll just be recruiting estate agents because no other jobs available. And I thought, have you seen Selling Sunset? I'm sure you have.
I love Selling Sunset, yeah.
It was pretty big at the time. That's when it sort of started in COVID. So I thought, looks brilliant. Let's do that. So I became an estate agent at Foxtons down in South London. So that got me into London then. And it's not quite the same Peckham and Dulwich as Los Angeles, unfortunately. Just as juicy, gossip-wise, of course. But I did that for a couple of years, or 3. I always saw it as a COVID job to get into the city and then move into the city. But it went on a bit. And then luckily, I was approached by Avamore Capital to come in as the internal relationship manager. And things have gone pretty good since.
Yeah, well, I think we've definitely got some questions about the estate agency world, especially Foxtons, because I think people will have heard lots of stories and rumours about Foxtons.
Fake news.
Oh, well, come on.
I'm not a whistleblower.
No. Well, that's in the rearview mirror, isn't it? I'm sure there's nothing too salacious that you're going to be saying, but you were saying previously you did a little bit of a stint also. Is it Investec? You had was that one of your internships?
An internship there between one of the uni years. I forget which one, if it's first or second year. But that was quite interesting. A month of August in the summer. So I spent some time in marine finance, looking at what P&O wanted to buy and refinance all their ships, be it a ferry, cruise ship, whatever. And then I think the most interesting part, and it kind of came to help me when presenting to credit at Avamore, in the asset finance role, you'd have to present to the board and say, here's the deal, do we like it or not? And I think the highlight was a high street lingerie brand, and being a 20-something-year-old boy, that was obviously quite amusing. And I'd have to tell them everything, these quite serious members of the board, all about Ann Summers. But luckily, obviously the owners are linked to West Ham, and at the time I said, if it all goes wrong, they don't pay us back, we'll just sell Andy Carroll or whatever striker they had at West Ham at the time.
Right. Well, we'll see if legally we can keep any of that in. But
I think they're all retired. So
yeah, but I think so. So in terms of times at Foxtons, what was the culture like? Because obviously we hear a lot of stories about about Foxtons. You know, there's even been like sort of exposés, whistleblowing, as you said, whistleblowing TV series and whatnot.
Yeah.
But what was it like really on the ground?
It was nowhere near as bad as you think. In fact, I actually really enjoyed it there. I think the culture there is very good, and I think the training's fantastic. So everyone I speak to and I say, I worked at Foxtons, and certainly when I meet people who've worked there as well, they all almost impressed because they know, you've done a hard paper round, if you like. It was, I guess when I started, it was 8 till 8 every day and 6 days a week, of course. So it's long hours. I guess you have to work the hours other people don't to be able to show them around property, right? So long evenings. You start your day every morning. You have a call-out session, so 9 till 12 is pure cold calling, and of course, everyone hates cold callers. Let's be honest, I do as well. If I'd have rung myself, I would have said, "Well, go away,"
Yeah.
But it's all about trying to hook people, get them on the phones, qualify them. I think Foxtons is very different in a good way to this stereotype of estate agent that, you go on Rightmove, say I want to buy that property next, on a weekend, come Monday morning, you get a call from Eric down the road. He just takes you, shows you in, doesn't really know anything about the property, doesn't really speak to you. He's just a door opener, right? Whereas this kind of, I guess, sales technique was to understand, Michael, you've inquired about this property, but what exactly are you looking for? What do you need? Not necessarily what you want, because I think a lot of first-time buyers, they want everything, they're unrealistic, and it's trying to work out what's the compromise. Certainly first-time buyers don't realise you've got to compromise somewhere. I think as you go down the line, you know that you're not going to get the perfect garden. There's a ladder. It's not your dream home right at the start. No. Certainly in London, if do you need a second bedroom? Is it to be an office? Are you having a baby soon? Do you need the outside space? Oh, there's a park just over there. Do you need parking? It's all these things. You've got to understand them and their life. I mean, I was always interested personally in what is it you actually do for a living. I was always keen to know how they got the money to afford this, because then I wanted to then aspire to have the same amount.
Well, I think it's also a really good question because it helps you qualify whether they can actually buy the property that you're looking to sell them as well, right?
Well, and then of course there's the cross sell that, let me get you to speak to our mortgage broker and conveyancer. You're always trying to do that, of course. So those things helped. So it's about qualifying them, and then I suppose teaching with stories was the big thing, and we do it a lot now. Obviously we'll come on to that, but in terms of my role now is teaching with stories. So saying, the property on that road sold for X amount, and we had so much interest, you need to get there today. You're always trying to instill the urgency, and I think that's the key, that we were always trying to get someone from A to B, the point of offering, as quick as possible, because otherwise, if you're just doing a door opener sort of thing, you don't have any control over that. It's just luck, quite frankly, when someone comes along and says, I want to offer on this. But if you're actually helping them and adding value to their property search, so the way we would do it, rather than say, right, yeah, Saturday 12 o'clock, I'll see you then, it's let me, and it's always the assumptive close, of course, let me take you for an hour in my little green Mini across London. I'll show you 2-3 properties, or probably more actually, I suppose, or 3 or 4 in an hour. You book the hour, so they come, you get them in the back of the car, so they're trapped, and then you just, I guess, brainwash them for the whole hour as you're driving around, but also chatting, qualifying, continuously qualifying them, and then showing them what they wanted to see, what they can afford, and what they want. And obviously there's discrepancies. What they want is probably £200,000 more than they thought, so then it's bank of mum and dad, or we don't have the money, speak to the mortgage broker. So it's always that sort of cycle. And then all afternoons, I guess you'd spend doing more viewings, but also chasing lawyers. So I've got good experience doing that. Chasing the solicitors to work out. And it's all about, this is what I mean. It's very transferable to what I do now, in that you're spinning these plates, that you're, I guess, constantly updating all parties on where are we at in the transaction, and trying to push things along for everyone's benefit, because as you know yourself, time kills deals. And obviously what we do takes a certain amount of time, but actually on that sort of front end sales of certainly at the moment in this current market, the easiest sale is probably 5-6 months, I think, a lot of the time.
Yeah. And the thing I've always found interesting is that trade-off between accommodation and location. In your experience, in your time at Foxtons, how would you say people? Where did people make the trade-off? Were people more inclined to go for more space in a location that maybe was less desirable? Were they more willing to make? Was the location the priority, and then they make compromises in the amount of space or the amount or quality of the space that they ended up taking?
It's probably 50-50, but I think if anything, maybe more. They compromise on the location for the space, I'd say, or certainly not necessarily location, but type of property.
Right.
Everyone wants a period conversion in London, of course, but you go in and the way they've all been chopped up, you've got restricted ceiling heights and staircases that go nowhere. But so then you go to a council estate, and obviously there's some people you take there and they go, they balk at it, but actually they're well built.
They're really nicely arranged, aren't they? Yeah.
Exactly. So I guess it depends on whether, of course, one of the questions is how do you get to work? Where do you go for work? So then I'm plotting. So I've got a good knowledge of the tube map, I suppose, from that. So then you're trying to move someone over there and say, oh, no, you can cycle from here. It takes X amount of time. Or there's your nearest station, actually, and that'll get you into work. Yeah. Of course, if they work from home, like a lot of people do, then I suppose location probably doesn't matter as much.
Well, was that also a factor when you were selling, because it was kind of in, on the back end of COVID, essentially? So there was that extra bit of working from home. So all of a sudden people were a bit less fussy about location, because they were like, well, actually, I don't need to go into the office as much, so I can be a bit further from where I want to be and have more space.
Yeah, but then it's exactly what you say. They want more space. So of course they're quite flexible on location, because certainly when I started, it was still lockdowns. The only thing you could actually do in lockdown, well, other than 1 hour outside, was go looking for property, because they wanted to keep the market moving. So we did have some people who you thought they just want to get out and they think they're on location.
How did you weed those out? How did you stop? Could you spot a tire kicker, or did it take a little while to work out who was a tire kicker?
It probably took a little while, because it was also when I started, but. I don't think there were many of them, to be fair. I think COVID probably brought people forward in terms of their house search, because I know the first lockdown, people realised, we don't actually like where we live. We want to live somewhere else. Yeah. So I think obviously there was the stamp duty holiday as well, so that was more of an incentive.
So it's probably quite a crazy time in the property market to be active, right?
And until was it sort of mid 2021 when it died down, and then I sort of got out at the right time, because the Liz Truss budget, Kamikaze Kwarteng, sort of made me make that jump to Avamore, I suppose. But going back to your question, I think people compromised on location because they didn't have to be in the office as much, but they all wanted a second bedroom or an office room, which they wouldn't have had before.
No, exactly. So that made a big difference.
So trying to sell one beds then is very difficult. You just chuck a desk in the corner.
Yeah, absolutely. And so. You talk about the transferable skills to Avamore, to development finance. What do you think are the key qualities that you benefited from the Foxtons days that you've been able to bring over to the development finance world more generally?
If I'm specific about things that I would only have got from that experience, I think the first thing that comes to mind is, I guess, in communication. As I said, you're constantly having to update all parties and be on your phone. I had a separate work phone then, so I was always on that, WhatsApping people. But I think the big thing linked to that is picking up the phone. I've said this before, that I think young people have a bit of they're scared to pick up the phone.
Young people.
I'm young and hip, obviously, Michael. Obviously, 27 years young. But yeah, people are not used to phones. They're so used to texting and WhatsApping, they hide, or emails even, that they hide behind that. So I think when you get a call from someone, I know that lots of my friends who aren't used to doing what I do, it's quite foreign to them just picking up the phone. It's either family or it's a cold caller, someone trying to scam you. But it's so crucial to what I did then and what I do now. I've got to pick up the phone all the time, constantly running. Even when you never get a holiday, you never really get a weekend in this job. But it's quite fun, I suppose, that you're constantly reacting. And I guess the problem with this culture now is that because you can phone and contact people so easily, everyone's quite impatient for a response. That's the thing you've got to juggle. You've always got to get back to people as soon as possible. and they don't really think, oh, George is driving or on a train or in a meeting or on a podcast with other people.
There are actually, I think if you have WhatsApp business account, if you're in a kind of quiet mode, you if you message someone or you call someone, you get a response saying, I'm currently in the middle of something. I'll get back to you as soon as possible. So it's interesting that there are even these tools that are geared up towards that.
Is that a new sponsor, WhatsApp for Business?
Yeah. Well, I'm more than happy to take some money from Mr. Zuckerberg if he wants to give it to me. But I dare say we might be a little bit low down his list of priorities right now. In terms of the development finance bridging market, there seems to be, even now, still new entrants coming out of the woodwork. Yet most of them, they seem to market themselves on speed and service. Let's be honest, that's not a massive differentiator in this space. Everyone knows that. But actually, how important is speed? Like it just overall in your experience, especially given the gestation period for a lot of transactions that you've been involved in.
Yeah, I think it's the main thing. I was actually with family this weekend, just gone, and they obviously said, so what exactly do you do? So then it's trying to explain to them what I do. And I sort of said, well, in our market, we all sell the same product. We all sell money, I suppose. That's what we do. It's loans. But the way we differentiate from each other is purely on service and speed and flexibility and the criteria. Obviously pricing is different, but I think the main thing is people want as much money as they can get and as quick as they can get it, often. So be it a bridge, say, to purchase a property or any kind of loan, but as long as there's a purchase involved, obviously they need that assurance of funds as quick as possible because they're up against, I guess, competitive bids, and some of which may be cash, and obviously cash is king. So you've got to be as competitive as you can against that to help them. Obviously, we see more and more auction purchases now as well. So then there's a real tight window to turn things around. We don't want to be the ones that are holding things up, right? We want to be the guarantee, and if anything, then it's, I suppose, the legals that hold things up that we want to help as much as we can to make that as quick as we can. I guess there's an element of taking a view on things as well. When things come up in the transaction as they do, we're fairly flexible as a lender that we can take a view on quite a lot of things to speed up that process. Indemnity policies is probably my favourite solution to anything. Whenever I hear an issue come up, it's like, let's indemnify that.
And I'm with you on that. I think there's still a little bit of a way to go for certain credit committee members to get them on board with certain indemnification. But where we can, we will. I
guess I saw it before when a similar sort of role that I get paid based on when a property would sell when I was at Foxtons. So I'm kind of like, let's push this along, let's push it along. Indemnify that build over agreement on the drain because whoever's built this has done the extension wrong or without permission. So I guess what we do is so much at the front end. I think a lot of people don't really realise that, and that's what I tell brokers a lot of the time, that we don't sort of say, we'll go and get the reports and then we sit down and look at the transaction and go, oh no, we don't actually like it, or oh no, we've got all these issues with it, let's sort them out at the last minute. We're very much front end, that you're the broker, I want to get, I guess my job is to extract every piece of information about this deal out of you, or whether I go on the planning portal or even a Google search. The Daily Mail is amazing, finding things out about certain borrowers, Companies House, of course. So we want to get the whole picture up front, and we're talking sort of 24 hours. We can do it if we've got all the information from the point of inquiry, and then we know, right, we like this deal. This is what we are offering. We will do our utmost to honour that, certainly on leverage, subject to reports. And I think what I say a lot to brokers is that we want to lend. We're not sort of the sort of lender that is risk averse, that is scared to lend out as much as we can. We want to lend as much as we can. We want to grow as a lender. We want a big, nice loan book. So I guess we're not the ones that are holding things back. We want to get the right people on this transaction that are going to make it the quickest, going to give you the numbers that we need, us and the borrower, and we're then giving them that assurance of funds so that they can go ahead with the purchase. Same with obviously the other side of things, refinancing. It amazes me how I guess some people leave it way too late at the end of their term to think about refinancing away, and then it's a race against time. We've just had the budget at the end of last year. There was a big panic at the end of that where people are trying to sell big portfolios before the budget, worried about what was going to come from it. So then we've got these deadlines, and we can act to it. We work pretty late hours. We'll put the graft in, and I guess it's difficult then to relay that to brokers because they're sort of sitting there tapping their fingers. But I think genuinely we are. I've only ever worked for Avamore. We are very quick at what we do, and try and find the shortcuts to make it happen.
And in terms of the lessons over the last 12 months, since you started in the relationship manager role, what would be the key lessons? What would be the things that you've about your kind of game that you've developed?
I think what's, I guess, been successful, and I kind of knew going into it, having worked for other relationship managers and now alongside them, is you've always got to be very, very honest and open. I think I'm probably too open sometimes, but you've got to be an open book, and with that comes that communication. So you're always updating someone, and if something's a bit behind, you tell them. You're not saying, "Oh, we'll get back to you in a day or two." It's always like now. I think the part what I'm getting at is the biggest thing is about not over-promising. You've got to set realistic. You've got to be realistic. Set realistic targets and timelines for all parties, because the worst thing you can do is over-promise and under-deliver. Because if you do that once, you've lost that trust. This whole business is about trust, and that's what I say about the service. That we could be sort of lender of the month, but then if we get one case wrong, the next month we're sort of off a broker's panel, if you like. You're only as good as your last loan, I suppose, and as good as your last game. So if we get something wrong, then I fully appreciate they'll go to other lenders for a little bit, but hopefully we can win that back, and hopefully things don't go off and wrong.
Yeah, I think one of the challenges, I've been doing this for 10 years now, and I think that the point you make about trust is I don't think we sell money or financial services. We sell trust at the end of the day, because I think probably a lesson it took me the best part of 2 years to learn from after, or maybe a year and a half after we started, to really work out what the game was essentially. And that point around trust is absolutely crucial. And it's always tricky, because when you're kind of an up and comer, you want to push the boundaries. You want to push the boundaries of what you can do. You want to push the boundaries of what your funding lines will allow you to do. And if you colour inside the lines, as Matthew Yassin said, nice boys get no sweets, right? So I think you don't want to be too nice and get no sweets. At the same time, if you overpromise and you colour too far outside the lines, then you end up in that sort of over-promising territory. And I think the danger with over-promising is that's where you burn trust. So it's a really difficult balancing act, I think, to navigate. And you're right, like it doesn't matter how many deals you do with someone, if you burn someone once or twice, no matter how good the relationship is, there's always going to be that reticence, because unfortunately, when you burn a broker, you're potentially costing them a lifetime relationship with a future client. Because I suppose unlike resi mortgages, where basically the client will work with whoever broker is available, that will give them the best, that can arrange for them the best deal. In commercial or specialist finance, it's B2B, which means it's very relationship driven, and the only way you can really break into that as a broker, the only way you can break into a client relationship is generally because another broker's dropped the ball. So and it's really important that we are not the ones that are causing that broker to drop a ball. I mean, you've recently cracked a bit of a key relationship without mentioning names for obvious reasons. And it's resulted in you doing quite a large volume of business in a short space of time. Obviously, you and I went to visit this gent in Bristol in the summer, and that relationship seems to have gone from strength to strength. What if you look at that particular example? What did you have to do to break into that broker relationship when they had, I know, very strong relationship and track record with other lenders that are very similar to ourselves?
I think, well, I know who you're talking about, and just slightly off topic, I guess what's quite nice is that he's also fairly a new broker, so not a lot of people know about them. So obviously a lot of BDMs want to crack all the big accounts, the big names. Yeah. So I think it's valuing the ones that are starting out. Another broker I've done a good deal with recently was actually an architect that's just started as a broker down in Surrey. So it's quite nice in a way that as they're growing as a broker, obviously I'm growing into this role as well. But going back to that account, I think back at the start of last year, I was just calling around names, obviously going through the database, and they went, "Oh, Avamore Capital. I've not dealt with them for a couple of years, or even ever, I think. It'd be good to hear about what you do." So it was quite, I guess, I was in then. The hardest part is getting in, right? Just in front of someone, because, like I said about cold calling when you're at Foxtons, whatever, it's quite easy for brokers to say, "I've got my panel of lenders. I've got someone for everything." We're sort of closed shop for now, until things go wrong, of course. But yeah, I went down and met this broker, just sat in his office. It was a brand new office, with boxes, I think, everywhere, and was only just really starting to get going in terms of the inbound clients, because they were a developer before that. And it was just a chat, really. I think people maybe, I try and get across that I'm not just a donut BDM. I don't just go around.
Yeah, the classic donut dropper.
Yeah. I mean, if you want donuts, I'll bring some to you. Let me know what flavours ahead of time. But often I bring some obviously great Avamore merch and good chat. So I think it was just I'm not particularly salesy, actually. I just go and want to have a chat with people, qualify them, find out who you are, what business do you do, how's your family, like. I know a fair bit about this broker in particular. And then it's, oh, by the way, we do this. This is how it fits in with your business. This is how we can help each other. So then from that first meeting, it's only about half an hour, just in this office, I started getting inquiries. He's testing the waters. We are delivering on our indicative terms. We're not saying, this is our leverage, this is our pricing. I think I'd like to think I exude the, confidence in, if this is what I'm giving you, this is what we do. Having been internal for 2 years, I've got that credit appetite, the credit policy. I sort of just know. I know what's an Avamore deal and what's not. And I stick to the USPs. I think you don't want to be a jack of all trades. You don't want to go around and say, yeah, we do this, we do that. You look at the FP show, for example, the back end of last year, or these other expos. You can go and say, yeah, we do bridging, refurb, dev. Oh, 20, 30 other lenders do exactly the same thing. It's sticking to the USPs, and I guess every time you see a broker, you've got to maximise what you're relaying to them, so that they go away thinking, yeah, Avamore for that, George for that. So got a couple of indicative terms out, and then he tried us. He said, yeah, you won that one, placed it with us. And I guess that's then trusting us to deliver on that. We did. I remember it was was that a small one? It was a small one, and I guess that's the thing. It doesn't matter, right? It's bread and butter. I think it was actually lower than our minimum loan size, but it's fine. It's just to get in the door.
Get the momentum
it's a tester, isn't it? It's a practice go, and then of course, as we saw, it's the back end of last year, suddenly you've gone from a lot of sort of small HMO deals to then big bridges.
Yeah.
And you don't really know that. And I think that's the thing. You don't go for the big names. You just give everyone the same amount of respect and time. And look, I'm quite happy. I don't know everything. So I'm happy to learn along the way as well with a broker who's getting this deal and doesn't quite know what to do with it. In terms of that growing relationship, I probably went down and saw him every 2 months, really. Really focused on the feedback that I got, not just on the terms, but on Avamore's service. And in fact, that led to the professional panel changing a bit. Obviously, we're very flexible on valuers, but he recommended a monitoring surveyor to us, got them on board, and then suddenly we got almost every deal of his came our way because he trusted that monitoring surveyor over. He didn't really know the ones that we had on our panel before, and things have gone well so far. So I guess it's just nurturing that relationship. I speak to him probably every day now. Several times a day I get phone calls about deals, but that's all part of the fun, isn't it? And it pays off. Yeah,
no, absolutely. I mean, you've obviously got you've got a good relationship there, and a successful one at that, which is obviously really great to see. But obviously, starting out as an external RM, I don't think I'd be breaking any confidences to say that you found it difficult at times to get into people's offices, didn't you? Especially in the first half of last year. What would be your lesson, the lessons you learned from that, and how have you adapted to those challenges so that you can get in and build, have more of those face-to-face relationships? Because clearly, as you demonstrated with the key account that we just talked about, you were able to build that and grow that through face-to-face relationships. So clearly, you understand and see the value in that. But how have you adapted to get more meetings?
Yeah, I mean, I was lucky with that one that he was pretty keen to let me in. I think it was one of the first meetings I did as a BDM sort of thing.
Because there's a lot of competition, right? Because a lot of the bigger brokers, they're inundated by lenders, donut droppers, to come and see them. So it's very hard to stand out. Yeah, I'm fully aware I'm not the only cowboy in this town, and you've got to stand out from the rest, right? So, to be quite honest with you, I think I've just resigned to the fact that I'm not going to be pushy. I'm not going to say, I'll just say fine. I will often say, oh, why don't I come and see you? Yeah. If they don't say, let's do it next week, then it's fine. You leave it, and over time, I sort of let the terms do the talking. I still, I guess, reach out to people, ask for the business. I think that's the main thing. Just ask for the business. Say, send me an inquiry. It's not just about getting in there, trying to get meeting numbers up and just trying to get in front of someone for the sake of it. It's send me an inquiry. I'll show you what we can do. So actually thinking of some accounts recently where I've got a bit of traction that I tried over a year ago, and they said, oh no, we don't do what Avamore do. We don't do those kind of loans. Or don't worry, I'm probably a waste of your time. I said, okay, fine. But now I see inquiries from them all the time because they sent one over that they thought, oh, that may be for Avamore. I guess it's all about keeping up appearances. So whether or not I'm actually in front of you, Mr. Broker, I'm on LinkedIn, I go to all these networking events. Word of mouth is a big help as well. So the brokers I have got in with then say, oh, in fact, I remember being at the B&C Awards last year, and I was chatting to a broker that I did a fair bit of business with, and he was on a table with this broker that sort of said, no, we don't do meetings, thanks. And he said, oh, George, yeah, we do loads of Avamore. Do you know? And he went, oh, the sort of penny dropped, like, oh, okay. So if you're doing that, maybe I should think about it. And as I say, recently I've had loads of inquiries from them, and I guess they're less reluctant now to meet up. So it's almost like persistence beats resistance in a way. You've got to grind them down a bit. But that's the thing, I'm not trying to grind someone down. I'm quite I've learned to just be, right, I'll leave you to it, but I'm here if you need. This episode was sponsored by Avamore Capital. Ground up development, refurbishment, part completed projects, fast bridging. Avamore Capital backs you through every stage. Direct access to experts who understand your timeline and pressures. Fast decisions, clear communication, no shuffling between departments or re-explaining your deal. From foundations to exit, Avamore delivers the expertise and funding solutions to keep projects moving. Visit avamorecapital.com. How do you work out I guess this is probably something you probably picked up from your Foxtons days, I guess, but how do you work out who's I suppose a time waster and who's actually serious? Because I can, again, over the last 10 years or 10 and a half years now, one of the things that you could tell is there are brokers who want to do business with you and are serious, and there are brokers that send you the business because they want some competing terms for their compliance file, but they're always going to give the business to another lender, right? Yeah, you do get a bit of that, but maybe I'm naive and I'm quite a positive person in that I sort of think maybe the next one will do. It's always the next one. So I don't really sort of give up on people like that. And I think it's gone well because there's some brokers you do
probably 100 indicative terms for and haven't done a deal, but maybe 101, and that happens sometimes. That you know, I've been doing this job for over a year now, and this particular role, and I've gone and met people, not done a deal with them, but after 12 months, now we've finally got one that's going ahead. So I guess you prioritize maybe, or you've always got to prioritize your pipeline, I suppose, right? So the brokers that send me deals that are almost straight to application, I'd probably see them the most. I've probably got 10 key accounts, if you like, that I speak to almost every week, really. And then outside of that, you've then got this pool that sends you lots of indicatives but haven't had any applications go ahead. You speak to them once a month maybe, and then you've got new brokers you throw in there as well, or some I've probably seen once a year. I guess it comes from the traffic, right? You're also quite reactive in a way that we get luckily lots of business coming my way. So I'm processing that and then realizing, okay, they've sent me a lot this week. And then when you get one, it's like, that's once in a blue moon. Let's try and build on that relationship a bit more. Yeah. Let me come and see you. So you're trying to get as many people into this, of course, but you don't want to let that group slip, that core group of, say, 10 key accounts.
Yeah. I mean, I think at the end of the day, like that's central, because at the end of the day, like you if you spread yourself too thin, you're sort of nothing to everyone, if you know what I mean, right? So I think in many ways I describe you as you're probably quite Marmite for a lot of people, George, you know, and I mean that in the highest compliment, which is that, you know, there's going to be people that there's probably going to be people that aren't going to be, or you're not going to be their cup of tea, basically.
Yeah.
But on the other hand, because you're memorable and because you stand out, it means that there's going to be a good core group set of people who are going to warm to you and are going to gravitate towards you.
Yeah.
And I think it's that sort of memorable factor that means that you're more likely to get the inquiries and build the relationships. I think one of the, again, what you don't want to be is a kind of, everyone view you as a sort of B minus. You know, you want that sort of that you want sort of 25% of people thinking that you're horrible and they want nothing to do with you, and then you want sort of 50% of people to think you're great and want everything to do with you, and then there'll always be people in the middle who think you're forgettable. I think that is the worst thing to be. I think in any sales role is to be forgettable. If you're forgettable, then frankly you're nowhere, right? So, and I don't think you're forgettable.
Thank you, Michael.
I think that's the key factor.
Rent free, am I in your head at all times?
I mean, there have been moments, George, but not necessarily all for positive reasons.
No. We've had our blows, but that's the thing. We similar in that way, I suppose. Both got, I guess, egos, right? I want everyone to like me, but I also know I probably everyone doesn't. Everyone doesn't, unfortunately. You can't please everyone.
No.
And that's basic economics, I suppose, isn't it?
Yeah.
Someone the other day came up to me and said, where are your stickers, George? Because I don't know if you remember, there was a time when I was going around handing out stickers just to be memorable. It said Georges on it. I don't know if it's very PC, but it was memorable, right? And I guess I'm quite active on LinkedIn. I am out and about quite a lot. So there's one broker the other week said to me, "Oh yeah, I know, I've heard about you. You drink a lot." And I thought, "Oh God, I'm not sure I want that on my back." But I guess that's the thing. You want to maximise your exposure with these people, your time with these people, because that's how you build on a relationship. So I'm often in a pub. That's where a lot of business happens, or shooting, or golf courses, or in fact, I've got a good relationship with a developer that I actually met at Foxtons that I was helping to sell sites with. I was at Christmas time round his house for Christmas drinks, and I was the last one to leave, and it just so happens in a way. But I guess I looked back and thought, actually, that's a good thing. Same with broker meetings or events. You kind of want to be the last one to leave because you're maximising your time meeting people. You don't want to be someone who just does the bare minimum. I guess I'm always trying to go a little bit, it's cliche, isn't it, but above and beyond to get in front of people and have a good time with them. You know, a lot of brokers I sort of see almost like mates in a way. They know about my love life more than probably what Avamore Capital do, but it makes me memorable, I suppose.
Yeah, I completely agree with it. I mean, you look at someone like Colin Horton, for example. Colin, again, I don't know how well you know Colin, but I think you'd probably get on like a house on fire.
We had lunch last week.
Oh, there you go. I'm sure it went very well. And I think ultimately the thing that the quality Colin has is he is really memorable, you know, and he is Marmite, but I think, you know, the key thing is winning more than you lose, if you know what I mean, right? And as long as you can do that, you know, there's so much business out there. You only need 20, 30 people that really love you, that and really want to work with you, and you can have unbelievably unbelievable career as a consequence of that.
But I think, and Colin's a good example, because you see him on LinkedIn all the time. He's here, there and everywhere. You know, I think people often think, oh, George is always down the pub or out for lunch or whatever. You know, certain brokers call me up and say that. But I get what's important to me, and I know for Colin as well, that you still do the job.
Yeah.
You don't, just because you're doing that doesn't mean you're not doing this bit as well. And Correct. That's the important thing, right? This is all for show and to get the name out there and to meet people. But actually, what's important is that I'm adding value. And going back to what you said earlier about having, you know, you don't want to spread yourself too thin and just be, you know, I have, I guess, categories almost of brokers, informally, obviously, of key accounts and whatnot, that I don't want to be at the stage where I'm out all the time and then I'm really behind on getting back to people, because then also if you leave it too late, you're not in the mix then, you know. It's almost a bit as soon as that inquiry goes out to lenders, it's a race then also to get back to them, because you want to be in it's a bit like Champions League, you want to be in top 4 to go to the borrower. You don't want to be just turning up next week with some terms and it's like, oh no, sorry, the borrower's already decided. Certainly, given how fast-paced things have become recently, and talking about speed earlier, as soon as that email goes out from a broker, there's a ticking clock then that I know I try and get back to everyone same day or within 24 hours. Otherwise, I'll be pretty furious with myself, to be honest. I beat myself up. I was like a small inbox. And then that's when I sort of say, right, well, let's stop going out as much. Let's sit in the office all day and just catch up on things. I know you hate seeing me sometimes in the office, but it's that admin time where I'm actually adding value and not just being a busy idiot going around saying hi to everyone, this is what we do, and then not doing it, right? I think brokers actually want BDMs who they can call and know what's going on, and that if someone asks me to do something, I'll action it there and then. It's not, oh, I'll come back to you tomorrow, or I'm a bit of a control freak on my deals, I'll be honest, that I struggle to, I guess, delegate the back end of the work, that I want to oversee all of it.
I hadn't noticed,
no. Yeah. No, not like you either.
Yeah, no. I like peas in the pod, unfortunately.
Yeah. So yeah, I think that's the key. Again, that maybe differentiates me from other BDMs, or I guess what I'm quite proud of is that I'm always doing the job as well as all the fun stuff, because it is fun. You know, let's be honest. Sometimes I think I'm getting paid to go out to nice restaurants and to just go for a drive down to Cardiff for the day, that sort of thing. But then you've got to do the job when I get back till quite late at night. Or
that's where you've got to balance it, which is that I think, you know, look, it's not for everyone. If you're not outgoing, you don't like meeting people, then it's definitely not the job. But you've got to strike that balance, haven't you? Because I mean, look, I think about, if I wanted to, I could literally eat out breakfast, lunch and dinner, and be having coffees in the morning and beers in the afternoon. I mean, I basically described MIPIM, but like literally I could have MIPIM every day, whether it's brokers, whether it's funders, whether it's service providers. You know, literally I could fill my entire calendar with I won't call it garbage, but you know, I could fill it with.
You'd have to get new trousers every week.
I mean, I wouldn't have time for. I'd be too hungover and wouldn't have the time to go to the gym either. But you got to strike that balance, which is that at the end of the day, like, relationship building is really important, and you know, particularly in a role like yours. But you do have to strike balance, because there's also work to be done. But you know, at the same time, you know, Christ, I'd absolutely have loved to have an RM role when I was at your age, you know, like that. I mean, I genuinely would have turned myself into the size of a house. Probably. Well,
apparently, I've got a beer pouch at the moment, so I'll have a.
I would kill for a beer pouch like yours at the moment, George. So just throwing that out there. But but obviously with start of 2026, any interesting themes that you're looking towards? You know, how do you see this year playing out? You know, in the property market, obviously, you know, having a bit of more than a bit of property knowledge, particularly in the London market, and I'm sure you've still got relationships and contacts from your Foxtons days. What's the mood music, and how do you see it playing out?
I guess everyone always says, and they say it every year, don't they? Sort of green shoots are coming, and next year will be better. And I think it will be, but I do think that it will be much the same. I mean, let's be honest. I don't expect interest rates to go down any more than they kind of are. I think this is the new norm.
Yeah.
You know, inflation's kind of acceptable now at 3%. So I think interest rates will hold as long as that's the case. And then it's just about confidence. I think that's what's going to impact anything, is people realizing that.
Yeah.
It's like, okay, there's no point waiting anymore to buy, to start building, because this is what it is. Can we make it work? So there's probably going to be an adjustment on values, but I think we're already seeing that in the last year, really. Because
I think in London for sure, yeah.
I think since May 2025 is when I noticed, okay, this is it now. And it's been pretty steady since then. Not really anything's changed fundamentally. Obviously, you'll get the odd budget where people panic for a little while and hold off, but fundamentally, it's business as usual. And
agreed.
I think people have also accepted they probably can't get. They're not going to get the interest rates that they had in COVID. They're probably not going to get the profit margins that they had before. So it's just people coming to terms with, this is the new normal. We accept it, and we need to build more houses, and people need somewhere to live. So,
do you reckon the private buy-to-let market's dead?
Why'd you say that?
Well, what I mean is, I mean, I'm not including portfolio landlords, but I'm sort of saying like the days of the your mum and dad having someone's mum and dad buying their flat and the flat for them for their university wherever they go, and then hanging on to that for the next 10 years.
I haven't really noticed it, if I'm honest.
Yeah.
On the front lines, if you like, the shift, because again, if people had an expectation of what they were going to get yield wise, someone else comes along and doesn't have that expectation and is going to buy it off them. Right. So it's not quite dead, if you like, but I guess things are a lot slower. Obviously, it's less lucrative than it used to be. Do
you think the HMO space is going to be as popular this year as it was in 2025?
It's difficult to know, isn't it?
Yeah.
I think it's quietened down a little bit. I'll be honest. I noticed at the start of, it's probably between mid 2024 and the start of last year when it was really booming. I noticed, and then it did sort of quieten down. Of course, now you've got lots of sort of care, supported living, affordable housing, where they've got not necessarily just letting out as a HMO, but to sort of housing associations and local authorities. Yeah, exactly. That's probably more lucrative at the moment,
right,
I'd imagine. Migrant hotels as well. We see a couple of them where, this is what they were getting for 3 years, and then suddenly whoosh, 3 times what they were paying before. So I don't know how long that will obviously last, but
did you see, I don't know if you saw, but Samuel Leeds was on, I think it was on Talk TV or GB News, and obviously very popular, well-known property podcaster. Samuel, if you're watching, we'd love to have you on. And he was saying, he actually said he has, I think he has a hotel or something like that in Leeds, and he's actually refused to let it out to migrants, which I thought was quite interesting. Because I've got planning consent for 19 units in Staines, and I don't think I have such high-minded principles. At the end of the day, I've got to put food in my kids' food on the kids' plates and table, and I've got a PG that from a bank that I'd quite like not to get called in. So it's a tricky one, isn't it? Where else do you think? Where else have you seen shifts in the second half of 2025 or the last quarter of 2025 as far as the types of inquiries that were coming in?
So certainly more. I think since May last year, a lot more ground up development than before. I think Avamore, obviously, or Avamore.
You can say both.
I'll just spell it now, because everyone always asks me, is it Avamore? it's whatever you want it to be.
It is.
It's Avamore of that, I would say. Yeah, I think ground up development really saw a boom since last May. I think before that, we sort of shifted to be a refurb lender, where we're doing the HMOs, doing the PD office to resi, and now it's gone back to ground up development. I guess going back to what we said, I guess increasingly so this year, that there's more confidence and an acceptance of this is the new norm.
Yeah,
build costs are here, our profit margins here, so and GDVs have kind of held in most places, and rather than gone up as much as they were obviously during the COVID years, if you like. So ground up development I've seen a lot of. We always at the back end of last year, and it's always quite seasonal, that you see a lot of part complete developments as well. We obviously do quite a lot of those. Less so, and I'd say less distressed than usual, which is pleasing to see.
The part completes that you've seen are less distressed.
There are fewer part completes now at 100% loan to value than I saw the last 2 previous years, so that's positive.
Yeah.
But obviously you still see some, and we try and get them out of jail where we can.
Yeah.
I think that's what's quite. That's what I do enjoy. That you feel like you're actually helping people. I know we talk about numbers and lending X amount of millions, whatever, but actually it's people's lives at the end of the day. It's not only for the people that are going to be buying these places, but the developers. They can get, I'm sure yourself as a developer, it can get really tricky, and things can go wrong, be it weather, bats, and even medical issues, right?
Yeah.
Everyone, it could happen to anyone, quite frankly. So we do take a view on quite a lot of things, be it poor credit, even profitability of schemes when it's quite far gone, just to get it done and on to the next one. So that I do quite like those nice, good stories. Yeah, we're actually helping people. It's not about the money or anything else.
Well, yeah, we know you like stories, and you're a good storyteller as well. So, I mean, the thing for me, part complete, or I still love the original branding of it, finish and exit. Obviously, the rest of the market kind of bastardized it, and ultimately that it sort of, I won't say ruined it, but we had to rebrand it as part complete just to make sure that it was a bit more like what it did. It did what it says on the tin, but it remains my favourite product. That obviously something I was very much at the forefront of the development of as a product, and in terms of branding it initially. And I think it's the one thing that we still very much stand out from the crowd on in terms of what we do. I think the difficulty has been for the past couple of years preceding 2025, values going down, GDVs going down, build costs going up. Just the viability of them when they came in was just
caught up in the market,
so difficult, right? So I guess hopefully, as you say, the more of them that we see going forwards, actually we can start to step in and help. Yeah. In terms of the stuff, again, getting the old Mystic Meg crystal ball out, in terms of 2026, the ground up stuff that you were seeing, presumably that was mostly housing schemes. Do you think that there'll be a resurgence of flatted developments, or do you think this is going to be a difficult year again for flats?
It really just depends on the location, doesn't it? I suppose.
Yeah.
Be it where we often, the thing I always check is liquidity. Whenever I get a scheme, punch the postcode into Rightmove and see how many have sold in the last 2-3 years within 3-5 miles. You get some places where they haven't had any flats built. Yeah. And you think it's hard to judge then.
It's chicken egg, right?
Yeah, exactly. You think, well, it's crying out for them. There's probably loads of people in that area that want to downsize, or maybe first-time buyers into that area, but you've got no record of that. I think flat values are probably, without having done much research, and obviously I've not been doing the sales for a while, but are probably more stagnant than your actual semi-terrace detached houses, I'm sure. And everyone says they want the house, don't they? But where's the space for it? I don't really judge them differently. Right. It just comes back to what does the data tell you in terms of liquidity, I suppose. You're always going to need flats, I suppose, aren't you, ultimately?
Yeah, I think ultimately, the thing that the thing that's probably holding back the development of flats is affordability for the end user, right? So and right now it's difficult for first-time buyers to buy flats, and if they aren't selling, then people are less likely to be building them. So there's definitely a viability issue at the developer end. I think some sort of help to buy equivalent will probably very much help kickstart that.
It was a bit of a fad though.
I mean, it was a fad. It was quite a long fad, wasn't it? But look, at the end of the day, probably need some stimulus just to kickstart that part of the market.
Yeah.
I mean, the other issue, I suppose, as far as I see it from the development of flats, particularly in London, is build costs are hard and are hard to get your head around at the moment. And then you've got the BSR stuff, so building safety regulator. Just to get sign off to get started on site is a big problem. So, it's very much hindering the development of apartments, particularly in London. Less of an issue further out because people aren't building quite so high. But yeah, I think that'd be an interesting thing to see how it plays out.
That was something we had quite a lot of when I was an estate agent. The Building Safety Act, the 18 metres, your 4 stories. Yeah. Then it was around that sort of time, that 2020 to 2022, when the EWS1 form became such a big deal. And I guess it was a bit of an eye-opener, all these blocks of flats in London that were built in the early 2000s that have
dodgy
cladding, Grenfell-style cladding, unfortunately.
Yeah.
So, and you do feel sorry for a lot of people that are stuck in those buildings. What's been quite interesting, as in people trying to sell their flats, but they can't because they're on a long waiting list to get one, and no one's quite sure who's responsible to deal with it. Interestingly, we've had 2 loans in the last year. I can't remember. I know one was in Wimbledon. I can't remember the other one, but where it's all about, it's a refurb loan,
correct?
But it's an external refurb where we're going in and funding the replacement of that cladding. So,
well, it's easy
to see more of those. I imagine.
I imagine we will. I think those ones are easier because you've got the client that you're dealing with owns the entire block, and you don't have any. You've got residential tenants, maybe you don't have, but you don't have owner occupiers, which obviously complicates things. Let's talk a little bit about tech. You and I maybe had some. We had the odd clash over tech adoption in the early days. Are you a believer now?
I am. Yeah. I always was, Michael. I always was. But I don't like change. My mother and anyone that knows me will tell you that. I'm a creature of habit. So when a process gets changed, there's an adjustment period, if you like. And I guess I see it as, in the initial stages, the beta version is sort of like slowing me down. You sort of double upping on work, but it's all good feedback, of course, and it's all working now. Yeah. So that's the main thing. And it's so much quicker and more efficient than it used to be. So I'm sure you talk about it all the time, but for those that don't know, we've got our own platform now. It's really, it's kind of started as more for internal use, that it speeds up our process. So our whole model is on there. So any inquiry I get, any data I input into there, generate the terms, we can upload the borrower's CV, their A&L statement, valuation reports, monitoring surveyor reports, right through the process. Now it's literally cradle to grave, isn't it, of the deal now, is all tracked on there. And I think more and more brokers are now starting to use it to make their own terms. If I'm out on the road, they can go on to this, it's called Cavendish, onto the portal, link below.
Link in the bio.
Yeah, link in the bio. And they can, obviously, I think what's a good tool, a lot of people used to like our calculator on the Avamore website and use that before farming out a deal. So it's a good way. It's, I guess, a more advanced version of that, isn't it?
Yeah.
And they can go on there, put all the details of the deal. It will tell them these are Avamore's terms, but also package it in a way that you can then send on to other lenders. So it, I guess, makes my job easier, but it also helps the brokers, and borrowers, in that they're getting the terms quicker, but also it goes into credit quicker. If you set up a profile, put the deal on there, and then upload those documents, as I said, for credit review, we have daily meetings. All I need is the borrower's A&L, their experience, or obviously we can take a view on some of these things. If they've got no experience, the contractor who's doing the work, get their experience on there, and then I guess what else do we need? Schedule of accommodation. What's the square footage? We then got all these AI tools that will sort of scan through it all. They will tell us what, we've got, I guess, like an AVM system almost.
We have an AVM system.
You can't rely on it.
It's not like an AVM, but it is effectively, it is an AVM system.
And that's a great tool. Rather than having to scour through Rightmove, it's very specific, even down to the road. It can tell what this is a discounted road compared to this one, because certainly in London, you've got an absolute dump, and then around the corners, a lovely row of terraced houses. You don't know what you get really. It's a bit of everything, isn't it? Here, there. So a postcode wouldn't narrow that down, quite frankly, and certainly different property types. So it's been very good efficiency-wise. It's so much quicker now for me to, rather than doing a model and then you sort of looking across onto our CRM system to send out terms. It's all in one place. Bam, they're straight in your inbox, but the brokers can do it themselves. And I think the biggest thing that I'm going to notice, especially now, is what I said before about I spend a lot of time updating, where saying we've got this report in now, this is where we're up to, whereas that's now all on our platform. So we've got the whole internal team are on there putting their notes in, so a broker can go on and see for themselves. It tracks it in real time, rather than it almost replaces emails and having to have all those calls. So it means I can be out more originating. And doing more and more deals.
Exactly, yeah. Have you what you might not have seen is the latest upgrade on the broker portal that's coming, which is that we've effectively got the deal summarizer in the deal tracker on our internal side. We're actually now able to summarize the entire email thread or email chains, so we can now effectively say, right, this is where we're at in the deal. This is what's left to do, and this is who has to do it. And we can actually transpose that now onto the broker portal, or each broker's portal for that deal. Also for funders as well, but probably less relevant for this conversation. And what's exciting there is that brokers can have a very clear sense of what is outstanding, and what needs to be done and who needs to do it. And I think one of the things that's really important to me is, like, because you talk about efficiency with our platform, with Cavendish, for example, and with Leap, the internal tools. For me, it's about predictability. I feel like actually the most valuable thing is actually that what Cavendish gives us, or what Leap gives us, is that if we're making an offer, we already know if they've got any skeletons in the closet, and we've factored that. We've baked that into the cake. We know roughly where the valve's going to come out. We know where the bill costs are roughly going to come out, although that's sometimes a bit more of a lottery. So when we're making offers, we can predict with a high degree of certainty. Like when we're issuing heads of terms, if you think about in 2020, the second half of 2025, how many of the heads of terms that were accepted that went through to completion, you compare that with the previous 12 months, it was like night and day. And I think that predictability helps someone like yourself, because it gives you, it means that, listen, if I issue you heads of terms, there's a very high probability this deal's going to happen. And that just builds trust, doesn't it, right?
100%. Well, literally, I think the last quarter, so Q4 of 2025, I had a 100% conversion rate of heads of terms issued to accepted. Well, that's crazy. Yeah. I'm quite proud of it, really. It's quite a stat.
That's driven by the trust, right?
Yeah, exactly. So, and as you say, it goes back to what I said before about the service and the speed that we're giving. We're doing so much at the front end that we're using all these tools, which Cavendish is, to analyse the whole deal. So we know right away. We're not waiting to the last minute asking loads of questions or realising things at the 11th hour and going, oh no, this isn't for us. We do all the background on the borrower, on the build costs, on the GDVs, so that, we're happy with this. Let's do it.
Love that. Right. Well, I think we're starting to start the wind down, George, but
it's a quick fire round.
Yeah, very much. Although you're still relatively young, you've come a long way in a relatively short space of time. If you wanted to reflect maybe on like the last 6 years of your career, effectively, since you kind of the start of COVID, if you were to give yourself some self-talk back in February, March of 2020, knowing what you do now, what would you have said to yourself and why?
I mean, I would have said be a sponge, and I like to think I kind of am anyway, and it's got me to this position that you're learning all about property, learning about lending. I think patience as well. I think a lot of young people, they see Love Island influencers, all this sort of thing, and think, yeah, we want to be earning millions by the time I'm 30, but it's all about learning, isn't it?
Yeah.
I think that's the key. It's just be patient. What will be, will be. It's, luckily, I'm quite happy in what I do. I enjoy work every day, and things have worked out. But if you asked me probably 3 years ago or 4 years ago, I probably didn't think that at all. So it's sort of like, keep going, bide your time, because it's all good experience at the end of the day. And I'm very grateful looking back now. But obviously when you're in it, you're, I guess, impatient that you want the next thing, you want the next job, you want the money to come. And actually, I think the time I did at Foxtons has only benefited what I do now. And the time I've been at Avamore, I think I was quite keen when I started that, right, I want to be a BDM because that looks cool, and that's what that's what you aspire to do. But actually, the years of being essentially a credit analyst make me a better BDM now, I like to think.
I agree with that, by the way, because if you look at your boss Adam, what makes Adam a really excellent sales director but relationship manager before that was that Adam really understood the credit committee's appetite, and I think that makes a huge difference. And if I think, whereas if you're a donut, if you're a donut dropper and you just give out the rate card,
it's someone else's job, isn't it? Then?
Yeah, it's someone else's job,
and then you don't have the relationship with that person.
Well, yeah, because people want to feel like when someone sends you an inquiry, one of the reasons they do that because they want to feel like you've got the ability to deliver for them. And if you are just the sort of proverbial donut dropper, you have no power, you have no authority. Whereas I can say this. I'm one of the two owners of the company, right? If you pick up the phone and to someone in credit, you have got the ability to bend them to your will to a certain degree. Obviously, there are limits to everything, but certainly that's true.
But it comes back to before about, I guess, managing expectations and not over promising.
Yeah,
right. I think that's the mistake most BDMs make, and it doesn't last very long if you do that. If you know what you do and what you're good at and sell that, then you won't come across many objections. And I think that's the issue, isn't it? You want things to be frictionless between you and a broker, and obviously down then with a borrower.
Yeah, no, I agree with that. And I think the point you make about patience is really good as well. I think that's a really good bit of advice. If I look at what we've achieved over the 10 years of Avamore, you can't achieve a lot in a day. You can't achieve a lot in a month. Sometimes you can't even achieve a massive amount in a year. But if you keep doing things consistently over 2, 3, 4, 5 years, 10 years as we are now, you come a long way. We started out with 3 co-founders, that we're now 30 people. We hundreds of millions of pounds under management. Not far off £1 billion lent. We expect in the upcoming financial year to be doing £250 million of transactions. But in our first year we did 20 million. That's not far off our single largest deal now. So, or a month's worth of lending. Like in the previous month that we've just seen. So,
slow and steady wins the race.
So yeah, it absolutely does. And listen, we see so many competitors kind of burn brightly and then disappear. So and here we are still. So
you want to scale in the right way, responsibly.
Yeah, but I think that can that applies at an organisational level, but I think also at a career level. And obviously, as someone who, we very much see as having a very long future, and coming into management, not far down the track, George. I think you're a great example to others in the business, but also in the industry as to what good looks like. So, hats off to you, mate. Well done.
Thank you.
Keep it going. don't rest on any laurels, but I
stay
think,
humble.
Stay humble, yeah.
Like Arsenal.
Like Erling Haaland.
I bought you a second place medal for last year.
Oh, thank you, George. Well, these are the things that that stands you out.
That's the only problem with Avamore. Unfortunately, they all support Arsenal except for me.
Yeah. That's true. But then
maybe this year, hey, maybe this year.
Maybe it could be. This year could be our year. I don't know.
Wasn't that last year and the year before?
All right, George. All right. Okay. Well, we won't talk about Liverpool this year. That's
fine. Champions.
Yeah, you can at least enjoy that. Okay. Well, anyway, hopefully we haven't lost too many people with that exchange. But George, I know you're desperate for people to reach out to you on the internet. So how can people reach out?
Yeah. So. The easiest thing is to go to go@avamorecapital.com. Literally go. Luckily, my initials are that short and sweet. And then obviously my phone number. Just give me a call. Send me a WhatsApp. Any inquiries, please let me know. Obviously on LinkedIn.
Yeah. Any other social channels, or we're going to keep it at that?
Not yet. Maybe I'll start my own podcast eventually.
Well, listen, you can take over hosting duties if you fancy as a guest.
And let me know
if Davina will let you anyway.
Well, yeah, that's true actually. But also, if you want a sticker, just let me know as well, and I'll bring
a Georgia sticker.
Georgia sticker. Yeah, I want to see as many offices as I can.
All right, brilliant. Well, look, thanks very much, George, for coming in.
Thanks,
I've been Michael Dean. I'm the host, and you can find me on the internet at property_funder. Many thanks to Avamore Capital for their continued support of the podcast series. And many thanks to producer Davina Patel for her hard work in organising and setting us up. I don't know if you've noticed, but we are in a new recording location, new studio. We've got technician Philippe also here, so thanks to Philippe as well for his help. Again, thanks very much for watching or listening, and we'll talk to you again on the next one. Thanks, and bye bye.